Hi everyone, welcome to today's video. So a few months back, India launched its rupee trade settlement system. Now this was a fairly important system. Under this, India was trading in INR terms with countries like Russia, China, and this was touted as the next big thing that would ensure India's rupee dominance on the world map. But unfortunately, it looks like that this system is collapsing and countries like Russia have said that, you know what, let's just hold and see how situation is progressing. And to cut the long story short, it is quite clear that this system is unfortunately not working out as of now. So now comes the natural question that who is to be blamed for the collapse of this system in a way? Is it Modi ji, who has been unable to execute this project well? Some people will say yes to that. Some people will say that, it is Rahul Gandhi's fault. Some people will say that it is Kejriwal's fault. But a logical argument here is that it is the fault of economics, and more specifically, it is the fault of the increasing US debt that is causing collapse all across the world. So let me explain this entire complicated story around the increasing US debt, and more specifically, how US is using the concept of US debt ceiling and exporting financial terrorism all across the globe. The countries are suffering. For example, consider the case of Argentina, where year-on-year inflation is around 100%. Now, how does this all relate to the increasing US debt situation, and who exactly is to be blamed for this entire mess that is going around? So I'll explain this entire complicated macro concept in very easy to understand language. If you are a class 9th, 10th, 11th student with no exposure to economics, you will still get this. My humble request that please consider liking these type of topics. It will make people rationally aware about whatever economics is going around you. I will relate all these points to the market dynamics also. So please watch the video till the very end. So there are two very important announcements that have been made by Janet Yellen. The first important announcement was made on January 19, and Janet Yellen, who is the Treasury Secretary, she ended up saying that we are redeeming existing and suspending new investments of the Civil Services Retirement and Disability Fund and the Postal Service Retirement Health Benefit Funds. So these are two major funds that have been disbanded in terms of the investments that were to be made into these funds. Second piece of announcement came a few days later on January 24th. And here the announcement was that I will be unable to invest fully the Government Securities Investment Fund or G Fund. These are government bonds in which the US government is saying that, hey, if we used to invest $100 into it, we will not be investing the entire yearly budget into this. So comes the natural question that, hey, why is it that US government is getting cautious in terms of critical investments that it used to make, and now it is deciding not to do it? So the answer lies on this particular graph, which accounts for the total public debt in the US up until the year 2022. And you will clearly see that there has been a massive spike in terms of the US debt volume that the entire US has taken. So comes the natural response that, you know what, debt to बढ़ती जाती है. It's not as if that debt lena is a bad thing. Of course, taking a debt is not necessarily a bad thing as long as your income is rising. For example, let's say that right now you have 1 crore rupee of debt. It might look a very exaggerated amount, but if your yearly earning is 10 crores, then yeah, 1 crore rupee is not that high a debt. So again, in this example, the debt causes no problem. But in US's case, what is happening is that the debt to GDP ratio, what in simple terms it means that what level of debt you have per rupee of income in a way. So that debt to GDP ratio is getting very convoluted. So let me present some data around it. So what you will notice is that during the Great Depression era, the debt to GDP ratio in the US was 36%. Then by the time we hit World War I, the debt to GDP was 75%. There was a sudden spike. Why? Because of the obvious reason that, hey, the World War was there, the US was suffering and the entire world was suffering with it. So definitely the debt will be increased. Then you continue to monitor this graph and you will see that right now the debt to GDP ratio in the US is more than 100%. So this is a very worrisome situation and it is causing havoc all across the globe. Now this is a topic that I have continued to discuss on several of my videos. So I will not belabor this point. So the word of the day today is belabor. Let me know what does that mean. So I will not belabor this point about the increasing world debt. Of course, it is creating a series of issues, no doubt about that. But on today's video, let me answer two central questions. One is that to what extent can the US take on debt? Can it continue to take debt forever? And second, and more importantly, what is it and what type of impact is it creating on other countries? And why are plans like rupee trade settlement system failing because of this rising debt? So let me discuss all these parts one by one. So first comes the question that to what extent the US can take debt. Can it take almost infinite amount of debt? The short answer there is an unfortunate yes, that it can take infinite amount of debt. Now, this is a special privilege that currently only the US holds in a way. Why? Because the US has the reserve currency in the world. Just to help you understand the market dominance of US dollar, you can take a look at this graphic and you will clearly see that most of the world trade happens currently in the US dollar. So this puts US in a very privileged situation that every time the US government decides to turn on the printer and print that $1, that is a $1 debt that it is giving to itself. So now if you are a rational thinking human being, you will say that, okay, they own the money printer and they can give themselves almost infinite amount of debt. So what is stopping them? Well, you would have often heard the phrase that the money or any form of money, be it INR, be it Zimbabwean dollar, be it the US dollar, it is backed by what? It is backed by the trust on the government. So yes, this free debt is a mechanism that US has more control over compared to other countries like India, Russia, China. But to cut the long story short, it is not as if that the US government will not pay the price for printing infinite amount of money. If they end up printing, let's say tomorrow, 10x the entire supply that they currently have, that will erode a lot of trust on the US government, because the other countries will start thinking कि यार US का कोई भरोसा नहीं है. Tomorrow they have printed $10 trillion. Day after they might print $100 trillion. So that just simply erodes the trust on the US dollar. So that is the simplified economic explanation that yes, theoretically US can print infinite amount of money and give itself infinite amount of debt, but doing that mechanism is really, really tough. So around that, a facade is built. Now facade is basically a structure. It's a fake structure, which is not really a part of a building, so to say, but it is an illusion. Now that economic illusion in monetary terms is called as the debt ceiling. Now debt ceiling in very simple, easy to understand term means, so this is a ceiling that we are defining, that the US government can issue a debt or take a debt of $100 billion. Now if that debt limit is met, then we have to think about the fact that, hey, can we increase this ceiling and bring it up to, let's say, $120 billion. Once that ceiling is hit, then another new ceiling might be defined, which might be $140, $150 billion, so on and so forth. So from time to time, new debt ceiling is issued and the US government ends up procuring debt up to that level. So that particular concept is called as the concept of debt ceiling. It just acts as a political indicator that, okay, this is the amount of debt that is reasonably okay in our economy. That is what all the lawmakers in the US agree to. And this debt ceiling keeps on going up, up and up almost every single year. Now, just to give you a little bit of context here, that from the year 1960, the debt ceiling in the US has been raised by a whopping 78 times. 78 times. So almost every single year, they have ended up increasing the debt ceiling. Now you might have one final counter question for me that, okay, what is the need for increasing this debt ceiling and taking so much debt? Can't the government be more responsible? Well, this particular chart outlines the entire story. Now, if you think about it, that the government actually needs money in order to run the entire governance. Now, how does the government get money? That concept is called as generating revenues, and most of the revenues for the government, even in a country like India, comes through taxes. But unfortunately, most of the major economies of the world, including India, we run on a deficit. Now, what is the meaning of deficit? Well, this is what the mathematical equation would look like, that the revenues are less than the expenditure that is required. So as a result, year on year, there are additional costs that needs to be incurred by the government. And how do they do it? In the US, the mechanism is that first you raise the debt ceiling and accordingly you issue new debt. So that entire mechanism is a way to fund your deficit. Now, just to give you context, here is the chart again. Please take a look that the US government has mostly operated on a deficit. You can see these lines in negative, they indicate that the expenses of the US government is much higher than the revenues it makes. Same applies to countries like India also, that even our expenses are higher than the revenues that we are making. So I know that this might be getting a little bit convoluted for a lot of people because this is a very difficult macro topic which I'm trying to explain. So hopefully if you rewind the video, watch it a couple of times, you will get a better grasp of things. But the subject matter itself is complicated. But here is the couple of sentences, easy summary, that the governments all across the globe, they require more money. Their revenues are less than the expenses. And in order to fund that deficit means a negative number, they have to issue new debt. In the US, that entire mechanism is done how exactly? exactly? First by raising the debt ceiling and then by printing more money. And the moment you print more money, that is a way of issuing new debt. So this brings us to section 2, that is this entire concept of increasing the debt ceiling and then taking more and more and more debt and reaching almost to that unsustainable level. Is that something that could continue, and for how long can it continue? Well, this brings us to the question of sustainability. So the question that we are simply trying to ponder upon is that are these high levels of debt sustainable? Which brings us to a philosophical debate that what is the meaning of being sustainable? Well, I would argue that we are already hitting that unsustainable limit, but has the world stopped working? The short answer is no, the world is still working. US is still the number one currency in the world. A lot of other currencies have tried to compete with the US dollar, but unfortunately they haven't gained any ground. So to cut the long story short, we can always debate about the current levels of debt, whether they are sustainable or not, how much new debt the US can issue, what would be the repercussions. We could continue to debate it, but the question of sustainability has to do with the trust on the US government. Well, this entire game collapses the moment the world stops trusting the US and more importantly, and they have some other mechanism to go to. Right now, it looks like that the world does not want to trust the US, but unfortunately, the new systems in the world are not at scale or as robust that would allow the world to transition to these new systems. This is a rational thought process that you should operate with if you are a new age investor and are looking to invest your money. Now, so far, if you have been enjoying this video, I would encourage you to go and check out my courses on Wisdom Hatch. I teach macro investing. This requires very less time in terms of taking out time from your studies or your full-time job to learn about stock market investing. Stock market investing is one of the easiest ways to beat real inflation that exists in the world, and I teach simple strategies around it in a very organized manner. So in case you are interested, do definitely check out the details. Now back to topic about sustainability. This is a political issue, and one of the US politicians issued this statement. So he basically said that if you give your child a credit card and they keep hitting the limit, you wouldn't just keep increasing it, you would sit down with them to identify where they are overspending and where they can change their behavior. Now, he said this statement in context of constantly increasing the debt ceiling and issuing new and new debt. Well, theoretically and practically, he is absolutely right that government should look to cut its spending. They should be frugal. They should be innovative. They should stretch every dollar that they are spending. But that's a political argument, and we know that politicians do not operate with that spirit. They operate with the entire larger than life image, and they end up spending crazy amount of money on entire stupid stuff also. This goes across nations. I'm not targeting any specific politician, but if you have to consider this statement of mine, consider this from a US's perspective, that even in the US, the politicians spend money on really crazy stuff. So if you have been able to grasp the video so far, you will categorically conclude that, you know what, the debt levels are going out of hand. It is very unlikely that the government is going to curtail its spending because they have no political incentive. Then comes the natural question that what will be the outcome or repercussion of this increasing level of debt in the world? Well, to cut the long story short there, it will lead to something called as economic domino effect. What exactly is it? Well, let's study this from the example of Argentina. Now, Argentina is a weak, smaller economy compared to many other Latin American countries, many other Asian countries, many other Western countries. So that economy seems to be going down as of now. Few months back, there was economic crisis in Pakistan, Sri Lanka. Again, very weak and small economies. Now, what all this is going to lead to is that it will lead to collapse of weaker economies, and then the buck will stop with bigger economies. Now, this is where we are headed towards in case this debt situation is not handled properly. Consider the case of Argentina, for example. The year-on-year inflation there is 100%. This means that, for example, if today you are buying this pen at 100 rupees, then next year this pen will cost you 200 rupees. There will be 100% rise on the prices. The year after that, that pen will cost you 400 rupees, so on and so forth. Now, the interesting side effect of this weaker economies going down phenomena is that it actually increases the demand of the US dollar. Consider again Argentina, that in Argentina, one of the most popular currencies that people look to buy is the US dollar. Now, think about it this way, that if the Argentinian peso is getting inflated by 100% every year, which means what? That, you know what, if that with one Argentinian peso, you could buy one candy in the year 2023, and if the inflation is 100%, then next year, how much money do you need to buy the same candy? Well, you need 2 peso. So there is a deflation of this currency. But the most strategic currency will be the US dollar. And that is one of the primary reasons why that in weaker economies like Turkey or Argentina or Lebanon, people are preferring to hold US dollar over their own local currencies. If you go to the root cause of the entire problem, which is the country that has issued the most amount of debt, it is unfortunately the US. But the more debt that they issue, they hit the weaker countries first. This domino will eventually hit the US one day, no doubt about that. But for as of now, the impact on weaker countries is going to be the highest, followed by mid-range countries, and finally something like US will go under. So this is the entire process through which the US is exporting financial terrorism to the entire world. So now I am sure that you would be curious to know that, okay, is there something that countries all across the globe could do something about this situation? Well, a country like India, Russia, China are trying. Countries are operating in their own self-interest here, and they are facing a series of challenges. So let me break it down. So first and foremost option that countries have is to decrease the demand of US dollar. Now, how can they decrease the demand of US dollar? Well, it is very simple that more countries that abandon the US dollar and more countries refuse to trade in the US dollar, lesser will be the demand of the US dollar. But unfortunately, what is happening in the world can be understood through this graphic. You could categorically see that the US dollar makes up 60% of the share of global reserve currency. So out of 10 units of currency that exist, 6 of them at a global scale exist in the US dollar format. Now imagine a world where US dollar is sucked out of circulation. People just say that, you know what, just faltu ka hai US dollar, we are not going to use it. What do you think is going to happen with all the money that Mr. Warren Buffett holds or a bunch of other rich people hold? Well, that also goes to dust in a way. They would not be able to convert 60% of the existing money that they have into some other form of currency. It would be very, very difficult for them to do it. The second is the issue of developing their own trade settlement systems. For example, consider the case of India and Russia, that India was trying to develop a rupee trade settlement system. Now think about it this way, that India, mostly what it does is that it's an import oriented country. Let's assume that India is exporting 100 crore INR rupee worth of products. It could be oil, it could be diapers or whatever it is. So they are exporting 100 crores to Russia. So this is the amount of money that Russia owes India, 100 crores. Now, when they are importing, let's assume that they are importing 500 crore worth of material. Why? Because India is a net importer of goods. So from that perspective, India needs to pay Russia 500 crores. So what is the net deficit here? Well, the net deficit is that India has to pay Russia 400 crores. In what currency? Well, if the trade moves to INR, then India will have to pay in INR terms. Now, if such a system is given a go ahead by the Russians, what would that do to the Indian currency? The Indian currency will appreciate and it will benefit India immensely. But you need to ask a natural question, that why would Russia agree to it? Because now Russia has 400 crores of INR. Which country is going to accept this from Russia? Is China going to say that, okay, cool, give us INR, we'll be okay trading with you? Or is US going to say, cool, we'll trade with you? Now that thing is not happening. You can understand this or proxy it by understanding the extent of forex reserve or dominance of forex reserve as per different currencies. And here again, you will see that US owns approximately 60% of the market. Other countries makes a minuscule figure. You can replace it with any currency. The thing is that the volume is just not there for it to replace the existing US system. And that is precisely the reason why the Russians have stopped the talks in terms of using INR as the de facto currency in terms of their bilateral trades. So before continuing the story further, let me quickly summarize the key points, that the US is literally abusing the system. Countries have no answer. They are trying but failing very badly, because the scale or extent to which these countries need to grow is just not there as of now to replace or challenge the dominance of the US dollar. So what is the natural response to all this, and how is this going to manifest? Well, I hate to be bearer of the bad news, but this is how it's going to manifest in the world. First and foremost, weak countries are going to get demolished the more and more debt the US takes. This is already happening. This will continue to happen. Second key problem is that we will move to a world where high inflation problem will perennially persist. Now, I will challenge you to think about the fact to what extent the oil prices, dal, atta, chawal prices in India have gone up by since 2020. You tell me, is the inflation 6%? The answer is no, it is not. Look at school fees, look at healthcare expenses. It is all going up. This is the new normal world that we are going to live in, where the inflation is going to be sky high. It is not going to be 6-7% in India in real terms, not official data. The official data can be outlined to say anything. So we are definitely going to move to a world of high inflation. That is not going away. This is again manifesting not only in countries like India, UK, it is also manifesting in countries like US. Finally, the most worrisome problem around all this is that countries are going to continue to make efforts. For example, India made the effort of trade settlement system. Other countries are buying more gold and multilateral cooperative organizations are being built. Countries are exploring options. What does that mean? It simply means that countries would try from time and time again to unhinge themselves from the dominance of US dollar. Every time the world tries to do it, there will be a period of really slow economic growth. Now that is where the world is heading. Now, if you are a regular viewer of my channel, you would know some of the strategies that I outlined in terms of surviving in this high inflation, slow growth world. Do let me know what do you think about this, how exactly you are approaching this entire situation. Now, if you are unaware, then tomorrow I will write a post on member community section where I will outline in a point by point format as to how to deal in a high inflation, low growth world. Thank you so much for watching. Please do press the like button and I will see you soon.